Umesh Revankar joins us, Executive Vice Chairman with Shriram Finance. Mr. Revankar, good morning. Thank you for joining us. There's a block deal in Shriram, Finance today. We understand that it is TPG. Could you confirm it to us that it is TPG, and after this deal, how much TPG stake is still left in the company?
To my best of my understanding, I think it is a total sale. Thing is left in Shriram Finance Limited. But TPG has been our partner for more than 15 years, and they continue to be our partner in insurance venture. So they have been our strategic partner, well-wisher, and we continue to work together.
But is TPG exiting largely? This is because, look, they were an investor, and now as an investor, they want to perhaps lock their gains, or perhaps the LPs are asking for money back. Is there a reason why TPG is exiting? Because the long-term picture for Shriram Transport Finance is so strong, and when the credit cycle has just about picked up for the entire CV business, why would a long-term investor sell? Because अच्छे दिन तो आ रहे हैं.
Yes, see, it is a good opportunity for the company, especially NBFC and Shriram Finance, to grow, and the market is good. The asset quality has been improving all time, and everything is very positive. But as you rightly put it, the TP has been with us for quite a long time, and they have every scheme or every fund has a limitation. And I think this particular fund, they have been, I think, with us for more than 7 or 8 years, and they have to sometime retire the fund. So, and that's the reason. So, however, we are quite happy with the TPG, and definitely we expect them to partner with us in our future ventures.
Could you tell us who are the buyers of this 2.65% stake, if you have some details?
No, I don't have confirmed breakup, but many of the Indian mutual funds have participated, and there are also some FII participated.
The existing ones from the list of stakeholders, or are there newer names as well?
It looks like most of them are new, and some of them are existing.
Interesting. So that's good to know. But let's talk about business now, since we have discussed the details of the block deal that happened. You had guided for an AUM growth of around 15%, which you expect to sustain. Are you looking at increasing that number? Because as we were just discussing, there's a lot of tailwinds for the credit to actually keep on improving.
Yeah. See, if you look at the overall business scenario, especially in the main business, that is the large business which we are in commercial vehicle, year on year, the sales are improving, including the heavy commercial vehicle sales are improving. That indicates that market is able to absorb the new vehicles in spite of increase in cost of acquisition. So that is very positive. And there is very good demand for credit in the SME segment also. And since we are now expanding the SME segment across the country, we do see a good opportunity to grow our business. And definitely, we will be able to maintain that 15% guidance which we are given on the AUM. But what we would like to focus is to grow the bottom line much better than the top line. So that is the idea behind the merger synergy and the advantage, strategic advantage what we have. And we are very confident of delivering it.
You've also talked about, demand for used vehicles, wherein you see, strongest of the growth coming in terms of your AUM accretion as well. Tell us what more gives you this kind of confidence. I mean, is the used vehicle market really growing?
Yeah, see, one thing is used vehicle market is all dependent on how the economy is growing. If the economy is growing fast, then it needs more wheels to be added. Now, this can be added through the new vehicle sales or used vehicle transaction, and it's a combination. So it is not that just used vehicle demand comes, but what happens is the urban, rural market and semi-urban market, you normally see the demand for used vehicle because the capital expenditure for acquiring used vehicle is less. And since it depends upon the application and distance to be traveled, people prefer used vehicle in those areas. But in urban or in the infrastructure, in the mining, all these areas, you will see demand for the new vehicles. So it depends mostly on the application and also from the segment and geography from where the demand comes from.
So, Mr. Revankar, a little short on time, so quickly a last word. You had indicated that Q1 margins will be slightly under pressure. What could be that pressure?
I don't see any pressure on the margin. In the past, we did mention that if the interest cost is increasing, then there could be some pressure. But now, since last two RBI announcement of no repo rate change, I think it is slowly softening, and we should be able to maintain our net interest margin at the current level. And we are hopeful that it will continue to remain for a long time.
Sure, Mr. Revankar. On that note, we'll let you go. Thank you so much for joining us.